Hello everyone, friends. Mozart here. I'm recording an interim review before some quite important data that will be released tomorrow. That is, this is the PCE index, which the Federal Reserve has been actively monitoring recently. In terms of importance, this is probably the second index for the Federal Reserve after the Consumer Price Index, that is, after inflation. Let's look at the price. What is happening now? Since the last review, I closed my short position at a profit. It fulfilled its part. I wrote about this on Telegram yesterday. At 58,900, I closed the entire short position that was open from the 63,100 mark. It's a pity, of course, that it just barely missed the upper point of the add-on, and the profit from this short would have been a bit bigger, but oh well. And I switched to a long position at the 60,660 mark. Currently, the price is roughly at the entry point. I am currently in a long position, and the potential addition to the long is set at the $56,000 mark. In principle, it can still be implemented, and I'll explain why now. Currently, the situation with Bitcoin is absolutely neutral. The market has reached maximum balance, a point of equilibrium. So, what is the situation here? We have this global descending channel, the orange one, and it has a center. Here we have reached this center in the third candle in a row. Now we are bouncing off this center. And above, we have a combination of all the moving averages, plus the death cross that appeared on August 10th. So we are currently squeezed between these two boundaries, and this movement will be absolutely chaotic here. Therefore, I also wanted to warn our trading higher time frames, starting from the daily, and most often it is the daily. I would not get into short-term trades right now. In my opinion, at this moment, currently, at this point in time, these long positions of mine are not short-term trades. They are more of a positional trading strategy. With a focus on the weekly time frame, short-term movements can go in any direction here, because any significant news, no matter how small, affects the market. In other words, at the current levels, there is not enough direct monetary interest from short-term participants to consistently keep the price moving in one direction. The market is in balance. That is, yesterday we once again bounced off the combination of all the moving averages. Sorry, the day before yesterday, on August 27th, we broke through them. We also broke through the monthly S3 pivot again, but now we are retesting it from below and have managed to hold the center of this channel. Such moments in neutral markets happen often. This could be a bad sign, or it could be no sign at all. Therefore, as I wrote yesterday in the Telegram, in this case, I am trading exclusively based on levels and the trend from the higher time frame, which is currently upward on the weekly TF. So, for example, I will now open the same weekly chart and show you Bitcoin. Here is the weekly tape for Bitcoin. Here we have an impulse, correction, impulse, and all of this is a correction. All of this is still one continuous correction. The price has made a correction of more than 61.8% since the last impulse, which can generally be considered sufficient for a more than serious correction. Plus, it tested the 50-week moving average, well, the yearly one, the yellow one in this case, on the weekly time frame. So, my current setup is as follows. Nothing changes here for now. This long position is still relevant for me, with an additional entry below. There are two main levels for Bitcoin here, which are generally of medium strength. Well, a bit stronger than the weak ones, a bit weaker than the average ones. That's how I would put it, below average. What is this? It means we have a level right here that we are closing now. The spike, as I call it, volume gap, also known as an imbalance. You can call them whatever you like. And there is this level, quite broad, around the marks of approximately 55 to 56. $1,000. This is an average medium minus strength level. The stylish level is at the mark of $53,000. This lower one. The block I drew at 53,000. Theoretically, it can also be tested. Initially, my first pending order before I moved them to long was closer to this level. You remember, it was somewhere around 55 and 750, right? And I raised it. Again, considering the weekly time frame, we can hypothetically test 53, given that we have this reverse pivot here. If we go to close this tower, then this return is approximately to 54 to 53 with a margin of impulse. So I'll say right away, this option is possible considering the current realities. This one is possible here. Thus, my average entry point will be around the 58,400 mark. From here, I am roughly expecting a reversal. Ultimately, if this scenario does play out, it might not, I don't know. Right now, it's just guessing. To be honest, just guessing where the price will go because it currently depends on external markets and external factors, not the strength of the internal market. If we close below the 53 mark, most likely even on the weekly time frame, then this long position can probably be closed at a loss. And we can wait for entry points at these two lower global levels, 41,800 and 46,950. However, I assign a small probability to this scenario, although I repeat, it exists. If it exists, the market is currently upward, and we also have support from the higher time frame. Out of the weak months, only one remains. September is the weakest season. The main thing is to get through. It will get easier after that. Plus, the elections are coming up. And seasonally, around the elections, Bitcoin, if you look at the history, has performed quite well. If you look at, for example, the year 2020, November 2020, crypto was performing very strongly. So here we are, November 2020, and the movement began. By the way, the bottom was in September. In September, we fell, consolidated, and then took off. So here are the elections. Biden is winning here. Biden promises everything. Mountains of gold, and we are flying higher. That is, seasonally, Bitcoin has behaved strongly. If we look even earlier, for example, at the year 2016, yes, we have the year 2016. Starting somewhere in the fall of 2016, yes, the same thing. Around September, we fell, the final drop in September. We walked, and then took off. Here's November, by the way, and we are standing at these levels. So, in principle, election season is a strong period for Bitcoin, starting right from September. Therefore, there's actually not much time left. And I can also tie my expectations to certain levels based on this. And why I am switching to a long position, considering the strength from the weekly time frame. So, that's regarding Bitcoin. As for Ethereum, I also have 3 entry points here, and I probably won't be exiting. If it starts to fall, I'll just enter with 3 at the average, around 200. That's it. I won't be making any sudden moves here. Regarding Ethereum, we have fallen deeply below the 200 moving average, and even the minimal target here is to test this 200 moving average. Even in the case of transitioning to a bearish trend, Ethereum has always tested a 200 moving average. Right now, it's around 3,200, and at that point, you can even close the current position and let Ethereum decide whether it wants to go higher or not. And for Ethereum, the first entry point worked out at 2505. The lower two are also still relevant. That's all regarding the technicals. Now, let's take a look at what's happening on the blockchain. So, Bitcoin and Ethereum continue to accumulate, meaning withdrawals from exchanges have started after we had an unexpectedly significant surge of payouts from MT. Gox and sales from the German government. Everything returned to normal. And Bitcoin is once again in deficit across all exchanges combined. So here, all exchanges are listed. You can take a look. Next, the momentum of profit and loss has indeed been in the negative zone for a considerable amount of time. I would even say a month, so for a correction, this is actually quite long. Probably the longest of such serious corrections I can remember is the correction in 2021, which lasted from May 15th to the end of July. It lasted 2.5 months. But here, in fact, there was already a transition to a bear market. Right here, and this was a test of the last peak. Because from the weekly time frame, we did not break the first peak, the April one. And in November, it was just a test of it. Here, there was already a transition, according to the indicators and the strength of the decline. There is no such thing now. Now it's just a gradual, slow decline. The standard correction itself is already dragging on. It's time for it to either end or start ending. Moreover, the matter is again moving into the fall. We have 2 identical charts. Next, here's what I mentioned in the last video. The average purchase price of short-term holders. This is our red curve. By now, we are testing it from top to bottom. Recall the last video. The price always returns to this average purchase. In this case, we didn't have to wait long. We are testing it. And right now, reactions are happening here. They're trying to hold the price to stop it. Let's see if they succeed, or if we will go lower after all. Testing $56,000 and $53,000. Such scenarios are incredible. I'll tell you right away, considering the current reality, just as very likely indeed is the scenario that we are simply squeezing this trio. Moving averages, we pressed the first hit, the second hit, moved around, the third hit, pressed, and eventually broke through. That's it, and we flew somewhere higher. This scenario is also likely. In other words, it will be more evident when strength appears in the market. For now, there isn't much strength in the market, and I repeat, it is mostly tied to external factors, and we all clearly saw how the market reacted to this. Whether it's the Iran-Israel conflict, the MTGOX payout, or a fund crashing into the market like NASDAQ, for example. In early August, the topics in Japan fell on August 5th. The market pays a lot of attention to all of this. The crypto market is very sensitive to external factors. This is because there is little internal liquidity. That's it. But from the upper levels, and I mean from the levels of the higher time frame, that is the weekly in this case, you can rely on them. It will have strength. And now, these are the current levels of $56,000 and $53,000. This is what we have below. From the top, well, if it goes up, you can start fixing around the marks, maybe even 65. These two purple lines are shorts. I'll remove them for now, as I don't plan to re-enter a short position at the moment. Maybe it's worth hedging again somewhere around here if the price comes to this upper boundary in the near future. Around $66,000 to take the last hedge from my long portfolio, but not before. Not before. Right now, I don't see much sense in it. That's basically it. This is an interim analysis. For all the latest information, I release it on the Telegram channel for those of you who are not subscribed. I recommend doing so, as it comes out much faster there than on YouTube. Thank you all. This was Mozart, and goodbye.